All right, ladies and gentlemen, you see Emerson with the closing bell on Wall Street as we welcome you to the daily closing bell report. And before we get to Jeff Yastine, Newsmax Editorial Director of Financial Newsletters, I'm told to say, Emerson, lousy numbers. We're going to get you today. Ha ha! Get it? Emerson, lousy numbers? That wasn't my line, but I am repeating it. All right, anyway, here are the numbers. The Dow down 44 to close at 17,985. We have the NASDAQ up 18 points to close at 49.24, and the S&P down about 2.25 to close at 2,097. A lot of factors going into today's numbers, as is always the case. So let's say hello to Jeff Yastine. And Jeff, I know we had oil and oil supplies. We also had first-time unemployment numbers to talk about today, and a little touch of grease, of course.
Yeah, let's take the whole thing that happened yesterday. We had the Federal Reserve, which they meet every 6 weeks or so, and their minutes from those meetings are delayed and released like 4, 5, 6 weeks later. And the minutes from the last meeting actually were pretty good. What the Fed is indicating, both privately as well as publicly, is that they're going to keep interest rates at these near zero levels for I think a lot longer than many are expecting, because in the minutes of that meeting, they said, they're going to keep them near zero for a long time. They know that the press is going to pick up these minutes and they're going to get disseminated, and they're speaking to Wall Street. They're signaling to Wall Street, hey, don't worry about interest rates. We're not going to raise them for some time to come, trying to get as much employment as they can.
Right. Now, as far as I'm sorry, go ahead.
No, I was going to mention about oil as well. Oil is very interesting. We had a bit of a pop the last few weeks or so. Oil going from around, 42, 43 a barrel to as high as $54 a barrel. I think it was on Tuesday, and it's given back some. What's happening is, every week the Energy Information Administration, a government agency, comes out with a weekly production of oil in the United States. And if we can bring up that chart, you can see where it continues to grow and grow and grow. And despite the news we hear about rigs being brought offline, the numbers continue to rise. I mean, this time, a year ago was about 9 million barrels a day. Now it's 9.2 million barrels a day. 2 years ago, a year and a half ago, it was 6.7 million barrels a day. So until we see a really big decline coming out of these oil production numbers, I think lower prices are still going to be in store for oil going forward here.
Yeah, and as far as there was some surprisingly good numbers on the first-time unemployment numbers for the previous week, correct?
Yes, that's correct, and that continues to support this overall feeling of bullishness in the stock market. It came in at, these are like weekly applications, first-time applications for unemployment claims, 283,000. I think that was 10 or 20,000 below what Wall Street was expecting, again, pointing to continued strength in the economy. Steve?
Well, what about the Greece situation? Because the market, notwithstanding everything you're talking about, did go down a little bit. Was there much Greece news today?
What happened was essentially there's a stare-down contest going on between Greece and Germany and the EU. Greece wants a better deal and more freedom from the austerity measures that have been imposed on them the last few years. Right. And right now it appears that Germany is saying, hey, forget it. We're not doing a deal. And so far, Greece is blinking. But talk to me tomorrow. All right, we might get a different story.
And it's funny. God willing, we will talk to you tomorrow. Jeff Yastine, thank you very much. And folks, if you want to take control of your financial future, go to moneynews.com, moneynews.com. Now, be sure to get your copy of the Warren Buffett's Next Door book. That's the Warren Buffett's Next Door book by visiting FIR411.com. That's FIR411.com. Up next, it's Gimme 5. Don't go away.